Hello guys. This video is the video that I promised to make that's gonna show us a simple way that we can use to scalp volatility 75 index. Just like we know, volatility 75 index is a trending index, it's a trending market. So we always want to follow the trend because just like the popular saying, the trend is your friend. Sometimes you can go counter trend and still survive, but if you really want to be on the safe side and have a high probability trade to trend, you have to follow the trend. So the reason why I'm saying this is before you trade, especially volatility index 75, you have to first of all understand the trend. There are many ways you can figure out what the trend is. You can use an indicator like moving average. You can use trend line. You can also, like here, you can be able to know that we are on a down trend when you see this thing going on down here. So there are many ways where you can be able to figure out the condition of the market, because we know sometimes the market can range. Volatility index is not an exception. Sometimes volatility 75 index can be on a ranging mode. So we always try to know the condition of the market. But most of the time, volatility 75 index can then trend. It trend is a trending index. So, but I first of all, when we are discussing about how we can, you know, scalp the boom and the crash, I was able to show that we can use our relative strength index, which is the indicator below. Then we can add a more moving average on it. So that will be able to show us, give us signal on when the market is, on bottom and when the market is on the top. So from this information now, for the benefit of those who don't really know, the indicator below is a relative strength index, and you know how to get your relative strength index. So the relative strength index is 90, 50, 10, and the period is 1. Then the levels are strong sell, which is 90, then weight or TP is 50. So what I mean is if you are selling the market and the market get to 50, you have two decisions to make. You can either take your profit or you wait. But what normally do happen is that market consolidate there, either go up or go down. So you have to be able to figure out what decision you will make when market reaches that level. Then strong buy is 10. So when market is hitting the 10, which is strong buy, then we have to position ourselves to take a long buy into the market. So that is it for the relative strength index. So the period is 1, apply to close, and these are the level 90, 50, 10. So you'll be able to put those in. So when you put those in, then you have to add these indicators. Moving average, the first moving average is period is 5, is a simple moving average, apply to close. That is it. Then the second moving average is period 3, method simple, apply to close. That is our second moving average. Then our third moving average is period 2. Method is exponential. Remember, method is exponential. Apply to close. Then the last moving average is the period is 50. The method is exponential. Apply to close. So these are the 4 moving average you need to attach to your relative strength index. So over the day, few days ago, I've been doing some research, because I look at the crash and boom. So though the strategy we apply to scalp the market, work most of the time, but sometimes we don't really have time to do that like 15 or 20 times in a day. Okay, so we really don't have time. So if that is the case, if you're in a situation whereby you can't really wait, to be waiting for signal to turn red and then you take it, or the spike or whatever. So you might consider using this same strategy to trade volatility 75 index. So I try it on volatility 75 index, and also I try it on volatility 100 index, and the results are very, very good, but you have to do use demo and master the entry, so that before trying it on live account. So what we normally do, you're gonna see that the 5 minutes will be where we look for the signal. Then we can go to the 1 minute and trade the signal. So that is what we do. Again, we have to come over to the 5 minutes and wait for the signal. Then we can enter on 1 minute. So, but I would like to repeat this again. The trend is your friend. So you have to figure out, today, what is the trend? Is the market trending up, or is the market trending down? So that is the first question you need to ask yourself. So when you get answer to this question, then you have to go to the next step, which is, if the market is trending down, that means you have to be looking for opportunities to sell. So now what you will do, you will allow your indicators. As mean here, I will use this to, if you go on the downside, you will see at that level where I put the vertical line, you will see that the whole indicator, which is moving average 532, and they were going down. They were going down. They were going down. Market was going down. So they were able to get to the strong buy. So when they come to the strong buy, what you have to do is to take it that your first step has been met, because we want the market, the whole indicator, all the indicators to get to strong buy, which is the area we mark 10. So we want our moving average, all our moving average, to come down to that level. So when we have all our moving average to that level, then we have to look at how strong the price actions are. Sorry, I'm trying to remove the vertical line. So we have to look for, look at the price action. If you want to do more analysis, you can always, go to the 1 hour time frame or the higher time frame to check for support and resistance. The support and resistance will give you more confidence, to take the trade. Because if this thing lined up, like say you are seeing a strong buy, and when you go to the higher time frame, you now see that the market is hitting a very good support. So that will give you more information, more details that you actually gonna make a very successful trade when you buy into the market. So that is number one. So now next thing you need to do is to go to the 1 minute. So it's not really here. So you also have to make sure that why the 1 minute, why the 5 minute is at the bottom. Why the 5 minutes is at the bottom, then the 1 minute also will be at the bottom. Then when you see a signal that the moving indicator, the moving average is reversing course, to go up, at least they are crossing the red, because the red will come down and sit at the bottom. So when you see that the moving average, all the moving average are pointing to go up, they are crossing, you'll be looking for that signal at the 5 minute. When you see that they are pointing to go up, trying to go in the direction of the 50 exponential moving average, which in this case is my red line, then you have to come to the 1 minute and see that the same thing is happening. The whole indicator is pointing, is already down, and they are trying to go up. So what you would do, for example, you would take your horizontal line and mark the area, and mark, for example, here the area where you are seeing the bottom. So now that will form a support that you'll be looking at. So when you mark the support, then even if market have moved a little bit up, then you have to exercise a little bit patience, because market will try to come down and test the level again. So when market is testing the level, and the level is strong, that will give you an indication that it's time to trade. So don't try to take the trade when the market has gone up already. Okay, there's nothing wrong about it, but 75 index, the peak movement is so large, so you want to take the trade around where the market is a little bit ranging, because those ranging is showing you, or is telling you, that is a reversal signal that market is about to reverse. So what I mean is, like, when you have, for example, market is trending all the way down, and you come to a point where market is not creating lower low, rather it's ranging in a particular place. It's just you guys know what is support. So when market is creating support, then you know that area is so strong, so it's supporting the information that the relative strength index and the moving average is telling you. So you can enter the trade. So for example, assuming it is this trade that you enter, you see, from here you will ride it all the way up. But remember that you have to do that at 1 minute. So this is a scalping. The idea of scalping the market is that you won't stay in the market for a very long time. You won't stay in the market for a very long time. But each time that this thing happens, I normally see like a movement of 2,500 to 3,500. So each time this happens. So I believe that if you are able to, you know, demo do a demo about this strategy, it's gonna give you one a more accurate entry that you really don't have to put a lot of like risk a lot of points or pips in order to take those trades. So these are one of the things that you have to bear in mind. Then the next thing you have to bear in mind is like, so when you take this trade and price push down low, so you have the choice to exit the market. And another thing I observe while researching this strategy is like sometimes we usually have like false breakouts. Okay, already when this thing happen, you know that on this short time market have already reached a bottom. So market have to consolidate or retrace before market can continue to go up in that direction. Okay, so you need to understand that sometimes there's gonna be a breakout. So you have to figure out, if they break, okay, when assuming you take this trade, you bought from the yellow line before the trending line. So a market broke the yellow line, going down. So you have to measure what your risk tolerance is and wait a little bit and see if market will retrace and go back in the direction you want it to go. So like I say, I've been testing this on 100 volatility 100 index and volatility 75 index, and what I observe is that they are very, 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 very good, strategy, because most of the time, like say 75% of the time or 80% of the time, when markets get like this one, it gets to the top, and next thing you will do here is like it's dropping, it's just dropping, it's gonna drop. So it doesn't really matter the trends, so in some case, but the reason why I have to advise you to always follow the trend is because you have higher probability to see positive results when you take market in the direction of the trend. So that is why this popular saying say the trend is your friend. So I would like you guys to, look into this strategy because it's very, very great. And if you have any question, and then you can, do where to ask. And also remember that the trend is your friend and try to, follow the trend. So I will stop here, and if anybody try it out, just let me know what's your observation is, and if you have any idea maybe on how to improve on this strategy, just go ahead and put it in the group so that other people can as well benefit. So research it and apply it in your trading and see how it will go. So until we'll see you again, I'm wishing you guys all the best in in your trading. Thank you.